Welcome to Market Movers. I'm Dave Hightower, joined by Dan Bossie. So Dan, crop report, April 9th, kicking off the season here. A lot of macro conditions, a lot of trade conditions, but we could switch roles here. Corn's got more supply relative to beans. That's a shift.
Yeah, it has been. That stocks and seedings number, David, came out at the end of March, was a big surprise. That came out on the 29th. Showed us we had almost 300 million bushels of additional corn, at least in old crop position. And we found an extra 800,000 acres of corn. So as we look at it, that report should have a negative flavor on corn, though USDA will not take all of that 300 million bushels because of past uncertainty with the stocks numbers. We think it'll be 150 or 125.
So in addition to heavy supply, ethanol demand for corn down. In fact, the corn grind for fuel is the lowest since April of 2016. But we may see a huge jump in that in the fact that China comes out and takes on some U.S. ethanol.
Well, that's right. U.S. ethanol or U.S. corn looks to be prominently featured in a trade deal. Those trade negotiators are getting closer here to some kind of opportunity. But again, we need to see the breakdown of what China will spend its money on. We are hearing $30 billion of additional demand on top of 2017. Gets us close to 50. How much will be corn and how much will be ethanol, David? That's up to the Chinese.
So in the soybean market, seems a little odd to say it, but we've had slightly better fundamentals of late. We've seen record crush going on around the world. So how long will that last?
Well, we believe crush margins will stay at average levels. It's nothing as like last year. But that being said, the question on soybeans is really what will the Chinese do? They still have an 8 million metric ton commitment yet remaining on their 10 million metric ton allocation. We'll see how that all plays to fore. But I really think as you get going forward, it's a combination of China and weather, David, that drives the marketplace.
And on that note, a 1.87 export figure from the U.S. is very optimistic. And are we going to live up to that?
Well, we'll get close, I think, depending upon what the Chinese want to do. But again, South American supplies are abundant, and we have to, fight our way upstream with that.
Before we dive into our trade discussions, I'd like to point out that these trades are examples and not recommendations or advice. So, Dan, give me your trade example.
Well, my trade example, Dave, is we're looking at a bull call spread in corn. We want to buy a 390 July call, sell a 440 July call for 8.5 cents. We're going to risk 4 cents with a target of 20. I still see the corn market because of China and the weather as holding opportunity here.
Yeah, we've kind of compounded a lot of negatives into the corn market, probably overdone. So, Dan, I also have a trade example. I'm looking at being a buyer of August soybean 880 puts for around 12 or 13 cents, and then I want to buy SEP corn futures at the market. So what I'm trying to do is I'm trying to be long corn, but I want to protect it with what I think will be the weakest component of the grain markets, which will be the soybean market. So what I would look to use is an objective of 412 basis SEP corn futures, and I want to risk that combination to a net loss of 450, and I want to look at that type of strategy for several weeks, maybe even a couple months into the future.
Well, if the weather stays cold and wet, we're going to add to soybean acreage, and as I said, there's plenty of supply in South America. You are picking the drag in the complex per se, so I agree with you totally.
Great. Given the weather, we're going to have some trend decisions probably in the marketplace. So, Dan, on Market Movers, we like to educate new folks just tuning in. This time we want to talk about spring flooding, planting delays, and what does that mean for this crop?
Well, it's something we take day by day and week by week as analysts. I say that because as we think forward, we now know farmers have the equipment to plant as much as 50% of the corn and soybean crop in a week. So saying that, we need a window of about 10 to 15 days to get the corn crop in, similar for beans. The question is, will Mother Nature give us that? But again, the forecast, at least as of today, and as we look at Midwest soils, they are at the wettest level that we can find in 5 decades. So it's a struggle already relative to where conditions are and how the farmers will get back to the field.
And we've come quite used to the fact that we're getting this crop in really early, and then subsequently that means maybe not as much heat stress later on. So it is important going forward. So Dan, thanks for your insight. We'll keep a close eye on the market. Thanks for joining us on Market Movers. I'm Dave Hightower. Trade well and trade smart.